everyone. I am Shilpa from BCom E-commerce Department, Nirmala College for Women, Coimbatore. Here I am to speak a few words about depreciation. So what do you mean by depreciation? As in a company, we will have varieties of assets, and when we prepare the balance sheet, we have to know what is the current value of each asset which we have. So in this concern, we will calculate the depreciation value. That is, as we use our assets regularly, it will have some wear and tear. So based on that, what is the present value of that asset? That is to be calculated. For that, this depreciation is done. So depreciation is a permanent decline in the value of an asset, the gradual decrease both in the value and usefulness of an asset due to its nature and usage of is termed as depreciation. Definition of depreciation. Depreciation is a measure of the exhaustion of the effective life of an asset from any cost during a given period. Objectives of depreciation. The main objective of providing depreciation in a concern is to ascertain its true profits. That is, when a particular asset is used for earning income of the business, the reduction in the value of an asset should be provided from the income in order to calculate the correct and real income of the business. So, depreciation is an invisible expense. So, it must be charged to the profit and loss account. Presentation of true financial position. If depreciation is not provided for, the balance sheet will not disclose a true and fair view of the firm. State of affairs, since the asset will be shown at figures which are in excess of their true value. Next is replacement. The amount debited to the profit and loss account are retained in the business. So with that amount, the company can have a replacement of the asset for which we have provided depreciation. These are available for replacement of the asset when its life is over. So by making an annual charge for depreciation, a concern would be accumulating enough resources to enable it to replace an asset when there is a necessary. No distortion of divisible profits. If depreciation is not charged to profits, trading results are violated and divisible profits are distorted. We cannot get the exact value of our profits. Hence, the joint stock company must have to provide for depreciation before declaring dividends according to the Companies Act 1956. So, these are the main objective for why we are providing depreciation. Causes for depreciation. The main cause for depreciation is the use of the asset. Wear and tear is an important cause of depreciation in the case of the tangible fixed asset. It is due to the use of an asset. Next is lapse of time. Assets such as lease, copyright, patent, etc. have a fixed number of years of legal life after the expiry of which they are rendered useless. As such, their cost is written off over their legal life and the amount charged against revenue every year is known as depreciation. This is true of acquired goodwill also. In these cases, depreciation is also known as amortization. Next is obsolescence. Loss of usefulness occasioned by improved production methods is known as obsolescence. For example, an old machine which is still workable may have to be replaced by a new one because the later may be more efficient and economical. Accidents. An asset may reduce in value because of an accident. Accidental loss may be permanent but this is not continuing and gradual. Disuse. A machine remaining continuously idle becomes potentially less and less useful with the passage of time. In fact, certain machines like farm implements and machinery used in farming kept in the open may depreciate more rapidly from disuse than from use. Inadequacy. It refers to the termination of the use of an asset because of growth and changes in the size of the farm. Depletion. An asset may get exhausted through working as in the case of mines, quarries, oil fields and forests, etc. The natural resources such as minerals, oil and timber get exhausted because of extraction and exploitation and the asset becomes useless. As such, these assets are known as wasting asset and the term depletion is correctly used to refer the expired utility of wasting assets. We have various methods of providing depreciation. So in each company they may follow different methods to calculate the depreciation amount of their assets. few important methods which is used by different concerns. In that, the first one is straight line method, which is commonly used by everyone. This method is the most simple and easy method which is commonly used, and the method of depreciation is by charging an equal amount or an even amount every year throughout the effective life of an asset. The formula for calculating that equal amount which is to be depreciated is cost of the fixed asset minus estimated scrap value divided by number of years of the expected life. That is cost of the total asset. What is the actual value minus what is the scrap, how much there is wear and tear, that value divided by the expected life of the asset. With this calculation, we can know the amount of depreciation to be followed. Diminishing balance method. In this method, the depreciation is charged a fixed rate on the reducing balance every year. Thus, the amount of depreciation goes on decreasing every year. So, each year we will be having a certain percentage of depreciation where that percent is to be calculated on the reducing value. For example, first year the value was 10,000 rupees. The depreciation is 1,000. Next year, the opening balance will be 9,000 for that asset, and so that 10% is to be calculated on this 9,000, and so our depreciation value will be 900. So likewise, each year on the diminishing balance, this depreciation is to be calculated. Annuity method. In this method, the interest at a fixed rate is calculated on the capital invested. That is the amount invested for that asset. It is done in the view that if that money was invested in some other asset, it would have earned some income. So based on that, based on the amount we have invested in that asset, in that a certain rate of interest is calculated, and that is to be done as depreciation. Fund or sinking fund method. In this method, the amount of depreciation is calculated with the reference of sinking fund tables. It is debited to the depreciation account and credited to the sinking fund account. At the end of each year, the depreciation is charged to profit and loss account. So, for a certain table we have, with that we can calculate what is the depreciation amount to be calculated, and that amount is transferred to sinking fund account. And after a few years, that is maybe 5 or 6 years, we can use that amount to purchase another asset with which we can work on. Insurance policy method. This method, a policy is taken or the amount of the asset to be replaced. So for that policy, we will be paying a premium at the beginning of every month, which is equal to the amount of depreciation. So after a certain period of time, the premium which we have paid, we will get it back, and with that money we can use for either the renovation of that machinery, or we can purchase a new asset for our concern. So this is insurance policy method. So these are few methods with which depreciation is to be calculated. Thank you for watching my video. Thank you so much.